So let me be blunt. I'm not buying this latest jobs report that came out today. Yeah, the headlines are screaming about 256,000 jobs added in December, blowing past the expectations by the analysts. And economists, of course, are patting themselves on the back, calling this a strong labor market. But forgive me if I'm skeptical, especially when you consider the track record over the last 4 years. And here's the inconvenient truth. During the Biden administration, millions, millions of jobs have quietly been revised downward after the fanfare of those initial reports. It's like a bad magic trick. Look at all these amazing numbers, people. And then a month or two later, poof, they disappear quietly. And of course, the media is silent. Just last month alone, 15,000 jobs vanished from the November report after a revision. When you add it all up, you're looking at over 2 million jobs revised down during this administration. 2 million jobs. It's not a rounding error. That's a systemic overstatement. But hey, as they say, let's not let the facts get in the way of a good headline, right? And of course, the market reaction today, predictably disastrous. I'll tell you, they fall for everything. The Dow tumbled almost 700 points today, and the Nasdaq dropped 317 points, and the S&P was down significantly as well. And these inflated job numbers, if they're correct, which I don't think they are screaming inflationary pressure, which then everyone takes a bite of, which translates to one thing: the Fed won't be cutting rates anytime soon. In fact, reports like this suggest the opposite. The next move could be yet another rate hike. And if that happens, it's not just the markets that will fall and suffer. Higher interest rates hurt everyone: homeowners, small business owners, to anyone hoping to invest in a future that doesn't involve eating cat food for retirement. So, circling back to the jobs themselves, a big chunk of these so-called gains came from government jobs. Translation: your tax dollars are funding this labor market, quote, strength. It's a ruse. That's not a resilient economy. That's a bloated one. And don't even get me started on the sectors propping up the numbers: healthcare, leisure, and of course, government. It's the same story month after month, with little sign of growth in sectors that actually drive economic innovation and prosperity. Then you have wage growth, which extremely important, especially in the midst of inflation. That is what they call moderating, which is economists speak for not keeping up with inflation. Average hourly earnings rose a measly 0.3% in December, which is great if you don't mind paying more for everything while your paycheck stays the same. And here's the kicker. To me, this is just another classic knee-jerk market reaction. Yeah, the Dow and the Nasdaq and the S&P got hammered today, but to me that just means there are deals to be had. Quality stocks are trading at much better prices than they were yesterday and last week, and I'm certainly not one to pass up a bargain. If you've got a long-term perspective and a process, this could be the opportunity you've been waiting for. And the old saying applies: buy on the dip. Bottom line, don't believe the hype. This jobs report might make for great headlines, right? But the numbers don't add up to me. It's the revisions that tell the story. And it's one of overstatement, inflation fears, and really a Fed that's not about to save the day. So take the report with a grain of salt. I say maybe a shot of tequila. You might need it. With that, have a great weekend, and we'll see you next time. Bye-bye.